Ever pondered about the current state of the stock market? A complex chess game is unfolding. U.S. stock futures await tech earnings reports and rate policy decision. This week is bustling in the earnings season. About 19% of the S&P 500, including Microsoft, Apple, Meta, Amazon, and Alphabet, report their earnings. Additionally, the Federal Open Market Committee meets on Tuesday. Market pundits are widely expecting the rates to remain steady. Meanwhile, Flutter, the parent company of FanDuel, is making its debut on the New York Stock Exchange, solidifying its U.S. presence. Still, risks lurk. At J.P. Morgan warns of potential headwinds for global corporate earnings due to a wavering world economy. In other news, oil prices have experienced a surge due to an attack on U.S. troops in Jordan. Meanwhile, Evergrande shares fell sharply after a court ordered the company's liquidation. Singapore's central bank has decided to leave its monetary policy unchanged. This week, 6 Dow Jones companies, including Microsoft, Boeing, Honeywell, Merck, Apple, and Chevron, will release quarterly results. In summary, U.S. stock futures remain steady. Brace up for a busy earnings week. The Federal Reserve decision and Flutter's debut are significant. Remember, stocks change, knowledge is power. Until next time. Before we wrap up, let's dive deeper into the earnings reports of the tech giants. We first examine Microsoft, whose cloud business Azure is dominating. Then Apple, exceeding despite supply chain issues, yet revealing dependency on the iPhone. Next, Meta, facing controversies, still reports robust earnings, with its metaverse project captivating Amazon. With mixed results, faces competition and scrutiny, its AWS division impressing. Alphabet, Google's parent, showcases strong earnings, its advertising and cloud businesses leading, with innovative projects on the horizon. In summary, these tech giants continue to shape the market with their financial performance. Their earnings reports provide valuable insights into tech industry and economy. Their successes and challenges can have far-reaching implications for investors and the global economy alike. Moving on, let's shift our gaze to the Federal Reserve's rate policy decision. The Fed, the central bank of the U.S., uses this policy to control inflation and stabilize the economy. A recent hint at a potential interest rate hike has stirred the market. Higher rates could increase borrowing costs, impacting businesses, consumers, and possibly causing a dip in stock prices. These effects are not immediate and take time to materialize. Market reactions are mixed, with some seeing potential for a more stable economy. Higher rates may also affect growth stocks, making them less appealing. In conclusion, Federal Reserve's decisions always have a significant impact on the market. As we monitor these moves, we'll keep you updated on significant developments and their potential market implications. Let's now turn our attention to Flutter, a company making waves in the tech world with its debut on the New York Stock Exchange. Flutter is unique, known for developing high-quality cross-platform apps. This can change how we use technology. The impact of their entrance into the U.S. market could shift the tech landscape. Given their efficient apps, we may see more competition in the sector. This could push companies to be more innovative. With growing demand for their products, Flutter is poised to benefit. NYSE debut may provide capital for growth. In conclusion, Flutter's debut on the NYSE could potentially reshape the U.S. market, driving innovation and competition. It's an exciting development, and we'll be sure to keep a close eye on Flutter as they navigate this new chapter. As we shift gears from the U.S. market to a global perspective, it's vital to note the mixed state of global corporate earnings growth. Some sectors, like technology, are experiencing rapid growth, but others, such as energy and real estate, are facing challenges. Trade tensions, geopolitical risks, and potential tightening of monetary policy could create headwinds. The ongoing pandemic and its impact on consumer behavior and business operations also pose considerable threats. A weakening global economy could further dampen earnings growth. In conclusion, the future of global corporate earnings growth is uncertain. There are numerous factors at play, and the situation is fluid. As always, we'll continue to monitor these trends and keep you updated on the latest developments. Stay tuned as we navigate these complex times together. Wrapping up our analysis of global corporate earnings growth, we stress the importance of staying informed. If our content was valuable, click subscribe, hit like, and share. Your support fuels our in-depth financial analyses. Stay tuned for future videos, financial trends. We appreciate your engagement. Together, we can navigate these complex economic times and stay ahead of the curve.